Well, let's move on. Let's see what you want to do next. Now, I got a different list here than what I have here, so I'm going to go out to Delta Airlines. Is that who you want to talk about?
Sure, we can go with that.
Yeah, let's go Delta because that's the way they're lined up. So that's what I'm going to do. I think actually we lined them up upside down here. But Delta Airlines. I mean, we're talking airlines, and I just flew a couple weeks ago. Airports are still full. I mean, you try to book flights. I mean, they're full. I just don't know what's going on with the airlines, and you'll talk more about that. But let's look at the fundamentals of Delta Airlines. Their symbol is DAL. Not much on the short side, 3.7%, about 83% institutional owned. We do see a PE ratio, nice PE ratio, 7 versus 11.5 for the industry. Price to sales, 0.4. That's the same as the industry. Price to book value is 1.6 versus 1.8. Price to cash flow, 3 versus 2.6. And the PEG ratio, very good, 1.4 versus 10.9. Now, this is not good. Over the last year, and I did not know this, their earnings fell by 31.7%, industry down 4.9%. The sales were up 4.4% versus 3.8%. So I'm wondering why those increase in sales did not pass down to the earnings. Maybe they had some write-offs or something else going on there. 5-year earnings per share growth rate from the analysts, 4.2%, pretty reasonable, especially when the industry is at 1.6. They pay a okay dividend, 1.6%. Wish I was a little bit higher. But what I like to see, they only use 9.3% of their earnings to pay that out. Look at the balance sheet, current ratio 0.4 versus 0.8. And I think if I remember with the airlines, there's something that they have, something about the ticket sales or a liability or something. Do you remember what the ruling is on that? That's why the current ratio looks so low.
Yeah, it could be because I know if you sell tickets, then that is a liability.
Yeah.
I remember this with the cruise lines. I don't remember if it was the same with airlines or not, but I mean, it would make sense. If you sell somebody a ticket, you have the liability to serve them down the road.
Yeah. And until they fly, that's your liability. I think that's what hurts the current ratio. But again, if you're going to invest in it, make sure you understand that. Debt to equity, a little bit high, 1.5 versus 2.4. And again, we got to remember airlines have big capital expenditures. Net profit margin, 5.6. That's very good compared to the industry at 3.7. And Delta Airlines, return on equity, 22.6%. Again, we look at above 15%. They check that box. So I kind of like what I'm seeing here. What do you got?
Yeah, current price for Delta Airlines is $37.25, 52-week range, right near the 52-week range. I think you're going to start seeing a lot of these companies near the 52-week range after this sell-off that we've had. But the 52-week low, $34.74. The high here, $69.98. Year-to-date, the stock's just gotten hammered down 38.4%. 1-year return, I mean, not too bad, I'm going to say. It's down 17%. Obviously nothing to be thrilled about, but it went way up, and now it's come kind of way back down. Looking forward for Delta Airlines, I mean, the numbers, they look appealing and very appealing. With that said, I go out to December 2026, estimated earnings per share, $7.94. I mean, it gives us a target sell price here of $131.80. It trades at a forward PE under 5. Earnings growth looks good too. I mean, this year earnings growth expected to be 12%, next year close to 15%. So it looks almost too good to be true, which is a little bit of a concern. And I'll tell you, the airlines, they scare me. And I know Warren Buffett does not buy airlines either.
Right. I think he did once.
And I think he got burned.
Yeah. Right.
And when I look at the airlines, we use our 16.6 multiple. That's the long-term average for earnings for the stock market. I don't know if you'd get to 16.6 times the earnings since it's such a cyclical business. And I know a lot of these airlines are trying to help remove that cyclicality. But I mean, if you have a slowdown, these stocks just get crushed.
Right. And I know we did look at buying Delta Airlines, I want to say years ago, right around this level. I think it was around 37. What we liked about it, I believe they had their own refinery. Does that sound familiar? This was years ago.
Yeah, I remember one of them had at least some relationship with the refiner, or maybe their own refiner. I don't recall, but I remember something along those lines.
Yeah. But I mean, like you, I get a little bit scared of airlines. I mean, they're so capital intensive. I mean, what does a plane cost? $1 billion now? I mean, it's ridiculous.
I mean, it's a huge number, which, maybe, I don't know. Did you give the free cash flow?
I gave the, let me see. I think I gave the price, but the free cash, I don't have the free, where's the free cash flow? Here it is. Let's see. Free cash flow payout. No, actually, where did that go? I know. Oh, here it is. Free cash flow. $2.8 billion. That's
So
above
they
the
have
industry
good.
at 1.5. That's a positive.
Yeah. I was just curious. I mean, because it is so capital intensive that I was worried that their capex would be extremely high and their free cash flow would then be depressed. But I mean, maybe they've kind of figured things out to improve the sustainability of these businesses to get through difficult cycles. It's kind of like the automakers. During a downturn, it used to be very hard for them to be profitable. But I'm gonna pick on or kind of applaud GM and Mary Barr. She's talked about how she's really made good strides to make GM a business that can be viable in downturns. Maybe these airlines have done the same thing.
Right.
And, I think, as we talked about earlier in the show, that these recession concerns are overblown. Maybe a Delta Airlines makes sense here, because if these recession concerns are overblown and people still travel, I think you'd see a very nice rebound in the stock.
Yeah, and it's just, and we really like companies that have a lot of free cash flow, because that's really how they can grow the company. And I'm shocked it's almost twice the industry at $1.5 billion. So that's a positive. And I think if I was going to buy this company, we do have ones we're looking at. We're on our watch list. I don't think we'll put Delta Airlines on there. But if you like the airlines, I think I'd want to look at their plane. How many planes do they have? Have they bought? When's the last time they bought planes? What are they going to be buying down the road? How's their traffic? I mean, to make sure, because if they do have a big purchase coming up, and they don't actually purchase them, I think they lease them, but still they're on the hook for that. You'd want to know if they have big purchases coming up.
Or even if they buy them, what would happen is they depreciate it, so it wouldn't flow through to the income statement.
Right.
It'd flow through on the free cash flow.
Yep.
That's a great point. It's almost like a company that's got a bunch of debt that's maturing. If they don't have a nice schedule of planes, we'll say, where they have to replace, let's say, 20 planes in a few years, that's going to be expensive. I'm sure they're smarter than that, and they have a good way of handling retirement for planes. But it's definitely something you want to understand.
Yeah. Airline business, very tough business, and I sometimes get excited about it. I like flying Delta, but I just get worried that you're right, very hard to judge what that company's really worth.
Yeah.
So